my friend, man. How are you doing? Hope you're doing good, and I'm doing well. I promised to make a video about how I took trades this week, and this week was very challenging on my side. I don't know on your side, but honestly speaking, on my side, things didn't play it well as expected, and that's due to the New York to give high of the day. Since according to my system, most of time I'm expecting London session to give a lower high of the day, and then New York will make a continuation. But this week was challenging, and we failed to get what we expected. On Monday, I traded the GBP USD asset class, and I was looking for long positions as price was trading below the Asian lows and targeting the Asian highs. Let's see. Quick reminder, you should know your steps to close the trade. I used to mark first. I marked the previous day. I mean the active clearing range. Active clearing range. After I find the active clearing range, I'll go and cross check the two-day open. Two-day open as my point of reference, and then I will check on something called Asian highs and lows, Asian highs and lows, and then check on the New York midnight open, New York midnight open, and then I'll focus on the key level, after that, entries. Yeah, that's how I'm taking trades every single day. So now let's see what happened on this day. All right, this is a GBP 15 minutes chart. After opening my chart on this day, I was observing the dealing range that was actively trading on Friday. We had this range from this low to that high. It's low, that high. Okay, this range is our active trading range at the moment, and if you anchor your fib, you're gonna see that price is trading the premium prices. Yeah, we're trading the premium prices, and I was expecting price to dig into the equilibrium of this price leg before expansion higher, like there. Okay, so that's what I was expecting. Okay, and then I marked the key level that may be found. This was the parent range in 4 time frame. At the key levels, previous day low and previous day high. This one were my key levels where I was expecting price to trade. Okay, so now I have two reference points. I have the dealing range high, dealing range low. I have the previous day high, previous day's low. On Friday, I'm trading Monday. Yeah, this is Monday's price. this one. This is the Monday's price. And this one is what I'm trading now. So after knowing this, I expected price to come below and hit the equilibrium level before true expansion, but price didn't go there first, and instead we went above and took the Friday's high. Let's see how that trade could be an opportunity to us. Simply, the previous day's highs and previous day's lows were acting as my liquidity according to my dealing range. That price has to either go above the dealing range high or into the dealing range at the equilibrium levels there. Is the OTE levels right there. The equilibrium and even the optimal trading entries below this low. So now let's see what happened on Monday. After having the previous day's low as point of reference, I then have the New York true daily candle open there. Okay, that is a true daily candle open, and above it is premium, below it is discount. Premium, discount. So now I have these two key levels: the previous day's highs, previous day's lows. I have a premium according to the true day open. I have a discount according to a premium day open. All right, we buy the lows, we sell the highs. Okay, inside the key zones. The next thing that I'm going to look at is the Asian range. How did the Asian range play? The Asian highs. It's the midnight of the Asian lows. All right, now I have the Asian highs and I have the Asian lows. But if price go below the Asian lows, I'm expecting price to take the previous day's low and the major liquidity sweep and hit at least the 50% of the current active trading dealing range. So I expected price to trade below the equilibrium and push higher, targeting the Asian highs and previous days high. Okay, but price instead started to give the move toward the previous days highs and the Asian highs, and now I'm above the range. I mean, in the premium of the range of the active trading range, and I'm above the 2-day open. That means in the premium prices, and I'm also above the New York midnight open. That gives another conference of being into premium levels, since above the New York midnight open and above the 2-day open, they're giving the same story, that above these time price levels is premium and below them is discount. So according to New York midnight open, above is premium, below is discount. So now I'm above the 2-day open, I'm above the New York midnight open, and I'm above the dealing range. So now I'm going to trade back into the range, at least into the 50% levels, targeting the previous day's low in form of a market maker sell model. So now I'm going to focus here and find if I'm going to get a 2022 model reversal. We had this kind of reversal, which is called low resistance liquidity run reversals. low resistance, liquidity, run, reversals. I don't like trading this kind of reversals because most of times they can give this kind of move and then get manipulated before true move. So I used to trade them before, but nowadays I'm just keeping them, and if I'm trading them, I'll trade them with a very low risk. Okay, for instance here I just traded them according to a silver bullet entry and a low risk trade, as this kind of liquidity sweep to me is not favorable to take trades at higher risks. Okay, so now after price breaking this low, I started to look at short position targeting the London low, previous day's low, and the equilibrium of the active trading range. Okay, and here higher displacement, then displacement. This latest candle up was an order block. Price traded back into the displacement, giving an institutional order flow entry drill. Traded down. So now let's see how we invested in here in a 5-minute chart using a silver bullet entries. In case you don't know the silver bullet entries, these are just entry that takes place by forming a gap after a true or a complete reverse, and it takes place during the specific time of the day, like here from 10 to 11. This is London. No, this is AM silver bullet. All right, this now is AM silver bullet fair value gap. Price traded in there with my stop loss just above the displacement and targeting the London lows. London lows. And that's how the trade played out. So now you can see how this trade was. We were above the 2-day open, above New York minute open, in complete range below, trading above Asian highs, previous days highs, low resistance liquidity run, reversal. Not my favorite one, but silver bullet gave us an entry, targeting the London lows. So Monday was cool, despite a risk small like 0.25 there. Take profit about 3.5 R. Thanks for watching. Don't forget to like, comment, share the video, and subscribe to my channel. Till next time, folks.